What is up, guys and girls, and welcome back to Deck Does Investing. This is episode 15 of my dividend investing journey. And since the last time I updated you guys, I have opened up my new 2021 ISA, in which I have added £500 and invested in Pfizer. But before I jump into the analysis, I basically want to set out my goals for this tax year. Firstly, I want to max out my allowance for this tax year, which should be achieved quite easily, as I have money sat on the sidelines, plus the money I save from my income should make this quite attainable. Secondly, I'm aiming for a 10% return on investment for this tax year, which includes dividends, which seems quite optimistic at the moment with everything that's going on. But I'm hoping, this is only short term, and in the long term, over a year or so, it's going to rebound quite nicely. And we should achieve that 10%, if not exceed it. And finally, I want to build a stronger and more diverse portfolio than in recent times to take advantage of the decline, picking up some great solid dividend paying companies and setting myself up for the future. So Pfizer, I basically purchased 17 shares with an average cost per share of £28.99. If we jump over to Simply Wall Street for a bit of an analysis, for those that don't know who Pfizer are and what they do, they are basically a healthcare company who both manufacture and develop healthcare products, and giving me basically a bit more exposure to this sector. So over the past 3 months, it has dropped around 10%. And also has had a 52-week high of $44.56. So in my opinion, now is a great buying opportunity to get involved with Pfizer. And hopefully, they can sort of rebound nicely from this and we'll see some nice capital appreciation. Simply Wall Street also undervalued Pfizer by 54.6% in comparison to its fair value, which provides an excellent buying opportunity and plenty of room for capital appreciation also. Pfizer also has a great PE ratio of 12.3, which both betters the industry and also the market. Pfizer is also expected to grow its earnings by 1.8%, which isn't particularly great. However, any growth, especially in sort of times like this, is very welcomed and is also great news. Pfizer has also boasted an impressive 18.6% past performance, which for me, touching back on the future growth, I believe they can exceed the sort of 1% that they're sort of aiming for, which they're sort of, the analysts are sort of aiming for, which gives me the confidence as a shareholder for this to sort of continue. And finally, to wrap things up, Pfizer pays a fantastic yield of 4.23% and have also increased their dividends year on year, which also provides me with some nice compounding interest, hopefully in the future. So that rounds up my analysis on Pfizer. If we jump back into Freetrade and have a look how the portfolio is now performing. So the S&P is down 1.24% over the week, and the FTSE is also down 4.12%. So if we have a look at the individual stocks and how they've performed in correlation, Pfizer, my recent purchase, we are down 1.37% with a loss of £6.74. And over the week, it has risen 3.96%. If we now jump into the basic account, HSBC, we are down 21% with a loss of £273.14. And over the week, it has fallen 4.84%. Virgin Money, we are down 36.76% with a loss of £367.82. And over the week, it has dropped 7.11%. AT&T, we are down 11.53% with a loss of £78.16. However, over the week, it has risen 0.67%. Legal and general, we are down 30.12% with a loss of £210.81. And over the week, it has dropped 9.39%. 3M, we're down 5.61% with a loss of £27.46. And over the week, it has dropped 2.57%. Unilever, we are down 4.28% with a loss of £20.35. And over the week, if Freetrade decides to load, it is actually up 0.29%. Aviva, we are down 33.42% with a loss of £206.56. And over the week, it has fallen 8.13%. And finally, Johnson & Johnson, the only shareholding we have in the green, we are up 6.84%. With a gain of £15.16. And over the week, it has risen 3.07%. And this is basically on the back of its exceeding its earnings report. So basically, we've seen a nice sort of rise because of that. So to sort of conclude on my portfolio, once again, majority of the stocks have fallen this week, especially the sort of UK financial ones. Again, like I said in last week, I was pretty confident that they were going to fall again. And they have done, basically. All the gains that we did see on them last week are sort of diminishing away. But I'm not too downhearted. Like I said, it's given us a great opportunity to get involved with some great dividend-paying companies and also setting myself up in the future. So to wrap things up, the portfolio is down around 18% now if you include the both basic and the ISA account. And we have received no dividend payments this week. So yeah, I will no longer be adding to my basic account now. All the money invested will be now going into sort of my new ISA, basically for the tax advantage that comes with the ISA. And like I said, I'm going to be trying to max out that during this tax year. So that's all I have for this week's episode, guys. If you have liked it, please give it a like. Subscribe if you want to see more videos like these. And finally, if you have missed an episode, there will be a link in the description. Please go click on that and catch up on any videos that you have missed. So that's all I have, guys. Peace.